Tesla, we talk frequently on the show. We were just talking about some of the meme stocks, AMC, et cetera. We talk a lot about companies whose stock price is seemingly divorced from reality. And I think Tesla falls into that category.
I am highly skeptical about their ability to do autonomous rideshare without LiDAR. Most experts think that's not possible.
Do you bake in any Elon Musk risk into your models? Look, the past 2 months, he seemingly has spent more time tweeting about Dogecoin than on the factory floor at Tesla.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we'll be answering the question, is Tesla stock detached from reality? I'll be reacting to some of the comments from the Yahoos on Yahoo Finance and sharing my thoughts on opinions from a new analyst who's begun coverage of Tesla's stock. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
We want to talk to an analyst who initiated coverage of the stock today. That's Colin Langan over at Wells Fargo, and he initiated with an equal weight rating. The price target is $590. Colin is with us now. Colin, it's good to have you here. Tesla, we talk frequently on the show. We were just talking about some of the meme stocks, AMC, et cetera. We talk a lot about companies whose stock price is seemingly divorced from reality. And I think Tesla falls into that category.
The old Tesla stock is detached from reality, or in this case, divorced from reality. Been hearing this line for many years now. I just want to pose a question to you guys and girls. Is it possible, in fact, that the well-informed folks on Yahoo Finance, aptly named I might add, are in fact those who are detached from reality? Just asking the question. Regular viewers of the channel will have seen me debunk, mock and ridicule some of the ridiculous things that I've heard from the folks over on Yahoo Finance, along with CNBS, etc. many times, so you can probably guess my opinion on the matter. The best way that I can sum it up is I actually think that detached from reality, divorced from reality, oftentimes is thrown around by people who don't actually understand the company in particular. We're talking about Tesla in this case. And rather than thinking, hang on a minute, why would the stock be worth this much? Why are investors willing to pay this much for Tesla stock? Instead of doing any of the homework, it's like, that looks a bit weird to me. Must be divorced from reality. There's no other explanation. Very shallow thinking. And this is a fallacy that many have fallen prey to. For years and years, there's been so-called experts in the media, analysts, all sorts of folks sharing their thoughts and opinions saying Tesla's stock price makes no sense, it's way overvalued, blah, 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 blah. Very few of these people have actually had a reasonable argument as to why. Instead of digging deep enough, looking at the rate of growth, blah, 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 they're just like, they're worth more than Ford and GM. That doesn't make sense. Therefore, detached from reality.
But at the same time, it doesn't seem to matter. The stock keeps going up.
Now, again, I just want to ask the question here. If your belief is that Tesla stock is detached from reality, yet it continues to defy your expectations and go up and up and up and up and up, is there a possibility? You take a step back and ask yourself the question, is it possible that Tesla stock is actually in sync with reality? Is that a possibility? I have a feeling, not very scientific, but that's all I've got to go on. I have a feeling that our friend here on Yahoo hasn't actually had that thought.
So how do you think about a stock like Tesla?
I think it obviously is a lot of momentum in this stock, I guess, to kind of put it out easily. And you have to believe a lot for the long-term story, but you also have to, from my perspective, have a pretty clear catalyst on one way or the other. And that's really why we initiated with an equal weight. I think in the near term, there are some good news that we see coming. I think deliveries will come in slightly better than expected as they continue to ramp in China. And they are really probably going to be one of the biggest, if not by far the biggest beneficiary if we roll out some additions to the US EV tax credits.
Some good points here. I agree. I think the Tesla's going to beat delivery expectations this quarter and next 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 quarter. And I could keep going for 4 years. You guys are going to fall asleep. The point is, I think for at least the next half decade, maybe even longer, Tesla is going to continuously beat delivery expectations quarter after quarter. Why? Tesla is ramping production faster than you can possibly imagine. And most people, rather than looking at what's going on and reasoning from the ground up from first principles, are reasoning by analogy. Analysts out there, media experts, even retail investors just cannot possibly believe, they just can't even conceive of a company the size of Tesla continuing to maintain a staggering rate of growth of around 50% per year throughout the next decade. But Tesla's going to do it. Quarter after quarter, year after year. At some point, the market's finally going to wake up and go, you know what? Despite the fact that no other company of this size has ever ramped production this fast, it appears that Tesla now has a history of 10, 15 plus years of defying expectations. Maybe we should actually look at their own projections, look at the rate that they're ramping production of new products, look at the rate that they're constructing new factories, extrapolate from there, and actually base the assumptions on what Tesla is doing rather than what other companies have been able to do in the past. The other great point there, which I agree with, no question, Tesla will be by far the biggest beneficiary of the new proposed EV tax credits. If you haven't already seen my video, check out the card in the corner. I went through this yesterday, did some back of the napkin math, and the results are staggering to say the least.
They've lost their credits, and reinstating those would be a big help for them. Those used to be 7,500. So those are two big positive catalysts for the stock. That said, we've highlighted three different issues. Raw material costs on the battery side are up about 50% since the start of the year. That will roll in as their contracts reset, but that's a headwind to think about.
This is actually a really great point. However, if you'll recall, at Tesla's Battery Invest today, Elon Musk made the public outcry, hey guys, anybody who's mining any materials that we would like, please, we will give you a gigantic contract. We need a shit ton, no, a fuck ton, no, multiple fuck tons of material, and we'll give you a gigantic, ultra long-term contract. Please, if you guys can secure us material, we'll sign the contract. So there's a very high chance that Tesla's contracts are going to be much longer and much larger than most other companies are going to be trying to get access to these raw materials. Remember, Elon Musk, Tesla already have the plan to scale battery production to multiple terawatt hours over this decade. Of all the companies that will be producing batteries in the future, I think Tesla is going to be one of the, if not the least affected by increases in raw material costs over the medium term, because they knew they'd need these materials, huge volumes of them, and therefore will have locked in the longest possible contracts they can at the lowest possible prices.
I think one thing we've been talking to investors that seems to be a little underappreciated is the regulatory risk. There's been some pretty scathing comments from the head of the NTSB about sort of the lack of driver monitoring and certain systems within autopilot. So there really is a risk that we could see some more regulations come down the pipe.
I have to strongly disagree here. I understand where he's coming from, but in the end, the data will win. I've covered this in recent videos. Most of the talk about Tesla's safety and driver monitoring has been coming from fuddy outlets like the idiots at Con the Consumer, I can't remember what they're called, Con something UMA reports, who, by the way, just to be really clear, are dangerously stupid morons. One more time, dangerously stupid morons. I covered this in recent videos. In fact, at the time of Consumer Reports suggesting that Tesla had unsafe driver monitoring systems because they weren't using the internal camera, we already knew that Tesla was literally testing this exact feature. We saw code online, it was in the video that I featured, showing that it was able to be done, and Tesla has recently implemented this feature. This is not news, there's no risk here. In the end, the data will win. Tesla has the data, Tesla knows what they need to do to make sure their systems are safe, and regulators look at the data, not the FUD, when making their decisions about whether the system is safe or otherwise. Certainly there's independent outlets who may or may not have huge amounts of funding from the likes of the Ford Foundation, ties to General Motors, etc., who might smear Tesla and suggest they're not safe or there's better alternatives. But they're not the regulators. The regulators pay attention to one thing, data.
And then I think as you go into next year, there's a ton of capacity coming online, and they need to basically set, record, well beyond almost twice the record luxury sedan and SUV volumes with the 3 and the Y to meet the capacity that they'll have in place. So a little bit of ways till that capacity comes online, but that will be an issue at that point.
Hey Colin, now I know it's your first time covering Tesla stocks, so I'll be gentle, but here's a pro tip. Don't reason by analogy. Just because Tesla will need to achieve things that others haven't been able to achieve is not a reason that they're not going to be able to achieve those goals. In fact, Tesla has a history of doing things that nobody else has done before. So instead of going, oh, well, that's going to be really difficult because they're going to have to do double X, Y, Z, fuck that. Reason up from first principles, from the ground up. Forget the noise, forget what other people have or haven't been able to do. This is an error we've seen over and over and over again by analysts, people in the mainstream media, retail investors, and everyone in between. Just don't do it.
Colin, it's Miles here. I know you're, initiating the coverage here and just kind of, giving a broad sketch of how you're modeling Tesla today. But I just want to ask longer term. I mean, you're looking at a 10% terminal growth rate, and the stock is fully valued on that rate today. Are there possible drivers to make you look more positively long term? Because I see 10% terminal growth rate for an auto manufacturer, and to me, that basically makes it the best auto manufacturer of all time already right now.
Well, I totally see your concern. I mean, I think as we look at it in 10 years, they need to be about, 12 million cars, over 12 million cars, which would be bigger than anyone today. So there's a lot of optimism priced in. That said, I mean, 12 million cars in a world of probably 100 million cars is not an insane amount of share. And if you really believe in the long-term story, and obviously there are many investors that do, they're willing to believe that. From my perspective, that that's a lot priced in, which is a factor in our equal weight.
Colin, do you bake in any Elon Musk risk into your models? Look, the past 2 months, he seemingly has spent more time tweeting about Dogecoin than on the factory floor at Tesla.
Here we go again. Salty McSaltface. Just can't help himself. Maybe that's in Brian's job description. It's like part of his role at Yahoo is to just be salty and just to hate on Elon Musk and Tesla. Maybe that's what he has to do. I don't know. Otherwise, there's probably some issues that Brian needs to deal with. Maybe visit a psychologist or a psychiatrist. I don't even know what's what. The one that'll help you out with your issues. Geez. Now, look, in all seriousness, though, if you're a muppet and you just rely on the mainstream media for your news and information, you may actually have the impression that Elon Musk has spent 40 hours a week for the last few months actually just focused on Dogecoin and Bitcoin. But of course, we know that's not the reality. This is just the media perception. I mean, what a silly thing to say. And by the way, just to be fair for the panel on Yahoo, it's not everyone who's a clown. Certainly, we've got Brian, the Sultan of Salt, but Miles, the younger fellow we saw before, actually does seem to understand Tesla. I think he's really got his finger on the pulse. He's probably behind the scenes shaking his head at some of the ridiculousness that comes out of his co-hosts' mouths regarding Tesla. Maybe I'm imagining things, but this is my perception, so I don't want to universally paint the entire panel of Yahoo folks as clueless morons when it comes to Tesla. There are exceptions to the rule. In fact, I wouldn't be surprised if Miles actually watching some of the YouTube videos out there on Tesla. Maybe not this channel in particular, but certainly some of them. He seems to be far more informed than his co-host by orders of magnitude. Tends to say reasonable things instead of have an agenda.
I actually, to be honest, I think most, if you look at investors that are bullish on the name, they kind of look past some of his unique habits. Definitely gets away with things that most traditional auto companies would not be able to get away with. But he also, to his credit, I think he's an innovator. He sort of has a visionary. He gets, is able to bring in some great talent into the company, and that's a competitive advantage. And so I think the bulls on the stock clearly are willing to look past those issues. So the truth is, I think most people are putting a premium for a lot of things that most companies wouldn't get credit for. You're talking about I am highly skeptical about their ability to do autonomous rideshare without LiDAR. Most experts think that's not possible.
This is a dangerous game, Colin. Now, maybe I'm misunderstanding, but I get the distinct impression here that Colin, rather than having formed his own ground-up awareness of artificial intelligence, deep learning, neural networks, and computer vision, is instead deferring to the so-called expert opinions. If they think it's going to be difficult, if they think it's impossible, then I think it's impossible. I just want to point out one thing. The world's #1 expert on computer vision, Andrej Karpathy, works for Tesla and is leading their computer vision efforts, their autonomous efforts, leading the team. One more time. The world's #1 expert currently working at Tesla, leading this effort. So there's that. But in either case, it's never a good idea to reason based on the opinions of experts. Fuck experts, fuck authority. Do your own homework, do your own thinking, and form your own opinions. This is a major error that Colin appears to be making. It's going to be very embarrassing in a few years' time when Tesla has fully autonomous robotaxis driving around without LiDAR, without radar, using a pure vision-based system. I've covered this in recent videos. There'll be more to come. This one does my head in. I really just don't understand. It's so hard for me to put myself in the shoes of people that don't understand this fundamental truth. We don't have any human beings today driving vehicles that use LiDAR or use radar. I mean, if you can't infer from that where things are headed, I give up. But again, Deferring to experts to base your opinion on stuff like this, not smart.
But most bulls will give them some sort of credit for that business. They're giving them credit for, the solar and stationary storage business, which really hasn't been profitable, and actually solar seems to have been shrinking. But I think people are saying that he's done amazing things on the car side, and so they're giving him credit for these other opportunities, which have yet to be proven.
Do you like seeing Tesla hold Bitcoin on its balance sheet?
I think it's a bit of a distraction. So I'm not really sure I understood the benefit of doing that. I don't know that I would advise most other auto companies to go out and buy Bitcoin.
Well, that $1.5 billion, whatever it might be, is that better invested in the core of the business?
Oh man, can you guys see that gigantic sign on Brian's head that says, "I do not understand anything about this company. I don't understand their financial situation. I don't pay attention to what's going on with the company. I've never listened to a Tesla's earnings call, yet I'm still going to ask questions and share my opinions." Now, Brian, not to be too direct and blunt here, but dude, Tesla had about $20 billion sitting around that they couldn't spend. There's not enough engineers, there's not enough battery cell supply. Tesla is spending money as fast as they possibly can, yet still accumulated a mountain, around $20 billion of capital they need to do something with. They took a small slice of that and put some of it in Bitcoin, and by the way, have made a pretty healthy profit on that despite Bitcoin's recent crash. Now, this would be a good question in theory if Tesla had $20 billion and they were deciding, you know what, we don't want to grow as fast as we possibly can, we don't want to do any more R&D, we're just going to keep this money aside because why not? That's not the situation Tesla's in. They have too much money. They're accumulating too much cash. They're printing too much money and they can't spend it fast enough. So they decided to do something with a little bit of that. Let's buy a little bit of Bitcoin. Just want to be clear here. If Tesla wasn't spending money as fast as possible, this would be a very valid question. But they are. And Elon Musk has made this very clear, which demonstrates that Brian doesn't really understand Tesla that well.
Well, I mean, they have $17 billion in cash. They actually made money off of it. It's not how I would, recommend most companies to place their cash. But, what am I to say? I mean, they actually made a profit already, so.
Hey, Colin, you mentioned you didn't think they could go full autonomous in an effective way without LiDAR. There was a report earlier in the week that they were talking to Luminar about maybe doing some kind of testing with their LiDAR technology, even though Elon Musk has been vocally skeptical, right, of LiDAR. Do you think he goes back, he's reversed positions on a lot of things before. Do you think he reverses course on LiDAR and says, yes, we're going to use it in the cars?
Yahoo really living up to their name once again here. If you don't know what I'm talking about, I debunked this. Check out the card in the corner. This is embarrassing. I feel bad for these people. This stuff goes on air. The internet never forgets these. Oh, dude.
It's a tough question. I mean, I actually don't think he is. I mean, a lot of people are saying that they're testing the LiDAR to validate their own system.
Bingo. Now, I've got to give some more credit to Colin here. Initiated coverage on Tesla stocks. So far, he seems to be a relatively well-informed analyst. We differ in terms of opinion, but he generally speaking seems to have a pretty good understanding of Tesla, the company, the future. Certainly, he's very conservative, and I say, probably lacking a little bit in the testicle department, not really willing to go out there with anything other than a hold. Got a $560 price target on Tesla stock. Super conservative, not willing to give Tesla credit for a lot of things that seem obvious to me, but hey, not going to hate here. At least he understands what's going on. He's fairly well informed. He's not saying things that are particularly ridiculous. We just differ in terms of our opinions and our bullishness on a few points.
It's sort of a big shift in promises and a massive shift in strategy. And quite frankly, if they start with LiDAR today, then, in the camera-based technology, they would, clearly have an argument for a head start. If they start LiDAR today, then they're actually in a big sort of deficit compared to everybody else without having tested with those sensors. And companies like Waymo, Argo AI, Cruise have all been testing with LiDAR for many years now.
Yeah, it's a good point. Colin, great to get your perspective this morning. Colin Langan is an analyst at Wells Fargo who covers Tesla, a lot of the other automakers. Thanks, Colin.
So I hope you guys have enjoyed this video. It's always interesting when an analyst initiates coverage on Tesla stock for the first time, and I've got to say, overall, Colin seems to have his head screwed on straight. We differ a little bit in terms of bullishness, but overall, he seems to be very well informed, which is not something I can say for 2/3 of the Yahoo Finance panel. No surprises there. Let me know your thoughts in the comments below. Did you find some of the comments from the folks on the Yahoo panel a little bit embarrassing? What did you think of Colin's thoughts around Tesla and Tesla stock? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.